by the fact that you want to learn. Okay, I made mention that for you to be working in the finance industry, or for you to make a decision to invest, to buy any security, you have to have the ability to analyze the assets of the investment before you make that decision. So whether you want to the path or the career of a finance person, or you want to be a top investor, you want to invest in any institution, you want to buy any assets anywhere, you need to have an idea of how to go about it. And there is a process that it is done. And that is what we are taking you through with the Young Investors Network. So I wouldn't want any of us to be left behind. I made mention that on Saturday, the time is yet to be decided. I'm going to go over everything that we have learned, and that will be an extended version of the training. We're going to go through step by step, so we'll get to where we'll end today. Okay, so today is Thursday, and tomorrow I will not be able to have this class, so you can sit on the platform. Okay, Emmanuel, if you are here, let everybody know that tomorrow the class won't come on. I will have it on Saturday where we'll go through everything.
Okay, please.
Yeah. So before we begin, I would like to nominate 6 people, 3 guys, 3 ladies. They would take us through what they have learned so far. So I'm going to use my discretion to go through the list of people who are here. Okay, so as they say, ladies first, so I'll begin with Annette Owusu. Kindly brief us on what you have learned so far and what your expectations are. You mention your full name, the institution of where you are located. Just a brief about yourself, then let us know what you have learned and what your expectations are on it.
Okay, good morning.
Good morning, Annette.
I'm Annette Owusu, level 400 student of the University of Ghana. And yesterday I really learned a lot, especially as we were introduced to some sites where we can get the information. For instance, the afx.com, the GhanaAnnualReport.com, the Invest Icon, and also we using the free cash flow for the equity, free cash flow to equity for the small firms, and then the institution like the MTN. We use the dividend model, dividend discount model. Yes, and also how to calculate for the growth rate, and then the how to analyze the trend too. Yes, that's what I've learned so far. That's from yesterday.
Okay, thank you very much, Annette. I think it's very impressive.
Okay.
I'll move on to Benjamin Colley Glover. Benjamin, please unmute and tell us what you've learned.
Good morning, sir.
Good morning, Ben.
So yeah, I just joined yesterday, so I just joined yesterday, but what I learned was how to do the comparison when you are finding the changes in the percentage change in the price. I learned that is the current minus the previous, divided by the previous, multiplied by 100. That's what I've learned so far.
Okay, that's impressive. So what was your expectation?
Yeah, at the end of this session, I'm expecting that I'll be able to, I'll get a lot of knowledge about investment, and yeah.
Okay, All right, Benjamin. So stay close to us. All right.
Okay, sir.
All right. Annette, what's your expectation? I didn't ask that at the end of everything.
Okay, my expectations are I would want to know how to analyze some trends of the firms, and also some should I say how to calculate their growth rate and how to compare the growth of firms, that is firms in the same industry too. Yeah.
Okay. All right. Thank you very much, Annette. Emmanuel, please, I would like you to work on a Google form
Okay.
so that we assess what they've learned so far, their expectations, so that they can guide in the delivery. If the delivery is poor too, there should be an avenue for them to state it so that I know how to improve.
Okay.
Okay. So we'll work on that so that we can all help each other.
Okay.
All right. So I'll move to Ethel again, our prayer warrior. What have you learned so far, and what are your expectations, Ethel?
Okay, so I'm now joining this morning, but my expectation so far is that at the end of this lesson, I'll be able to buy a share at one of the listed companies.
Okay. Thank you very much, Ethel. Now I'll move to Lord Nyamado. Lord, can you unmute, introduce yourself? Let us know what you've learned so far and what your expectations are, Lord. Mr. Nyamado.
Hi.
Hi.
Hello.
Hi, Mr. Nyamado.
Can you hear me, please?
Good morning.
Hi. Good morning, everyone. So I joined I think yesterday, and when we started. So far I've learned about the growth rate. I mean, so the financial statement, the income statement, growth rate, how it is calculated, and I mean, basically also this is my first time. I have a background in mathematics and stats, so this is my first time having to have an idea about how the businesses are like. I mean, investments, management, and all that, portfolio management. My expectation is also to grasp the necessary knowledge I need to, so far as investment is concerned. Yeah.
Okay. All right. Thank you, Lord. Okay. All right. So finally, let me go to Vifa.
Hello, good morning.
Hi, good morning.
Please, I just joined. What are we talking about?
Okay. So we want you to introduce yourself, which institution you are, what you've learned so far, and what your expectations are.
Oh, okay. So, good morning, everyone. My name is Cindy Bifa. So I'm in level 400 in University of Ghana and majoring in banking and finance. Yeah. So my expectation is to get like real experience, like practical experience. I mean, yes, through this program, because we've been taught that theory in school all the time. So when I saw the flyer, I just thought like it would be a good idea that I would get practical experience through this program, and as well as the mentorship. Like I need to upgrade. Yeah. Thank you.
All right. Thank you very much, all of you. So I'll move straight to today's lesson. First, I'll take you through the analysis that we've been doing on GCB so far. So I have concluded on it, and I'm ready to send something to my clients. So that is what you can see on your screen. of the investment recommendation. If you have questions, ask anytime. I'll pause for you. I'll answer the question. All right, so I'll go to the beginning of the slide. I hope you can see the screen. Stock recommendation GCB August 13, 2025. Report by Maybank Capital Limited. You can see it, right?
Yes, please.
Okay, all right. So my first page, this is not a stock page. Stock page structure is different. All right, stock page structure is different. So this one I'm giving it to my clients to enable them buy the shares in GCB. So the first page is executive summary that summarizes almost everything. So I'm talking about profit surgeon between 2024 and 2025. We went through this yesterday, percentage change, percentage growth. So you can see I'm reported that profit has grown by 99.08%. And I'm also reporting that total assets have grown by 37.03, despite operating cash flow declining 42.44. So this is what we did yesterday. Percentage growth, financial growth analysis. Right, this is the aspect that we did yesterday. We haven't touched on ratios yet. We're going to do ratios. So I'm also reporting the ratios, the prominent ones. So as you can see, with the financial growth, I did not mention everything. It is not, you don't have to describe or talk about everything. You can just select some few of them, the very prominent ones, and speak about them. So the ratios to the same. Return on equity improved to 17.16% from 10.31 in 2021. And then again, you can see that in the financial growth, I reported between 2024 and 2025. With the ROE, I'm reporting between 2021 and 2025. So I'm reporting 2021 10.31 to current 17.16. ROA, I just mentioned the current figure of 1.86, and PB ratio declining to 0.51, which is the current figure, indicating undervaluation. So the analyst, you have to have the flair, you have to have the skill. Okay, you are not. I'm just praying that you guys will not just take what I am teaching you verbatim. You have to apply some skill. You have to apply some flexibility. All right. It doesn't have to be true and poor. That is why I am involving you every now and then to hear from you. Okay. So try and be flexible. All right. Don't say because I compared 2021, 2022, 2022, 2023, and so on. You're also going to do the same thing. Be flexible. All right. Let the investor, let whoever you are speaking to, let the judge know that you are very confident about what you are saying and you are different. All right. Research analysis is not a true and poor thing. Okay, it's about going through the procedure right, getting the information right, and presenting it with clarity. Okay. Now
Hello.
move. Hello.
Please, the PB ratio, did we do that?
No, we haven't done that yet. We haven't done the ratios. We haven't done valuation models. We haven't done these two. All right. We've just done the financial growth, the growth analysis. That's what we have done. I'm just taking you through what I have concluded on already with the data that I shared with you. I hope you have it.
Yes, please, I do.
So by now, it is expected that all of you are playing around the figures that I've sent, and you are practicing. These things is about practice. If you don't practice, you will not know. And if you don't practice too, you will not identify issues. The more you practice, the more you hit roadblocks, the more you investigate why the roadblocks are there, and the more you know. So let's keep practicing. All right. So I applied the free cash flow to equity model, where I arrived at 21 cedis 11 pesos for GCB. And I also used the target price approach, which I'm projecting that it will, in the next 12 months, it should reach 11.93. And by the end of 2 years, we reach 14 cedis 91 pesos. And I also mentioned something about the residual income model, which I stated that it's good for financial institutions, for banks, and so on. So with that approach, I ended up at 10 cedis 57 pesos as the intrinsic value. So bottom there, you can see the recommendation: buy at the current price of 9.54. I saw that yesterday there was a change in the price. Yesterday, close of trading. Let me go onto the website and find out the price of GCV as of now. Let me share my entire screen that we follow through all that we are doing. Okay, so let's go to AFX. AFX. Okay, look for GCV. Okay, so GCV changed yesterday. You can see the price is 9.57. Okay. Okay, so it hasn't really changed. 9.57. Okay, it hasn't changed. That was yesterday's price. It's also at August 13th. So that means I picked yesterday's price for the analysis. I didn't realize it. Okay, so the price is 9.57. Oh, okay, so I picked 9.54. Okay, so it means as I yesterday went up 0.31%. It's now 9.57. And my price at the time was 9.54. Okay. So, I mean, these are indicators that, I mean, this your analysis, it works. All right. And the projection that I have made is that in the next 12 months, it should get to 11. In the next 2 years, it should get to 14. I did a presentation to you guys about Access Bank when the price was just also around 9 cedis and it's now 16 cedis. So that one, two projections were made and the prices have been met. There are several others which I also showed you. So this thing that I am taking you through, I'm sure when you take it very serious, you're able to do a lot within your space. Okay, so I talk about the company overview, something brief about the company overview, the financial analysis, which I preferred to use charts. So you can see 3 charts of statement of financial position. I displayed total assets, total liabilities, and the total shareholders' equity. And we can see the income statement chart too here, where I spoke about 3. I'm displaying 3 items. So net interest income, operating income, and the profit for the year. And then regarding the cash flow, I prefer to use the net cash flow from operating activities. The financial ratios are all listed here. I'm going to take you through financial ratios. All right, so just let's be patient. All right. So the valuation analysis, the free cash flow, I mentioned it, the 1-year target, which is based on the earnings per share growth and constant PE ratio, residual income, the cost of equity. I will explain all of those. Then I talk about the markets. So year to date, this market GCB has returned 49.80 year to date, dividend yield 10.5. And I also speak about the sentiment in the market. Most important, you have to speak about the risks. It's very important that you touch on the risks. All right, so market risks, operational risks, regulatory and economic risks, very, very important before you come back again to the investment recommendation. So use a summary again of why they should buy. So strong financial growth is a reason, 99% profit growth, 37% asset growth, H1 assets 45 billion, up from 33 billion. Return on equity 17.16%. PE indicates efficient operations and undervaluation. We have the price target, which is displayed an upside potential of 52% from the 9.54 based on average of 3 valuation models. I decided to average the models the figures that I got for all the three models to come up with a 14.47. So I'm also mentioning that there's an attractive dividend yield of 10.5% with dividends expected to be paid out, but the BOG wants to come in as to approve it before it is paid. This is my conclusion. GCB demonstrates resilience and growth potential in Ghana's challenging economy with improving profitability, efficiency, and valuation ratios, making it a compelling buy for value investors. The consensus target price of 14.47 or 14 cedis 47 pesos, which is a range of 10 cedis 57 of the residual income to the 21 cedis 11 pesos of the FCFE evaluation model, suggests an upside from 9 cedis 54. So all the models that I chose indicates that the stock is a buy. However, ongoing monitoring of economic and regulatory risks is essential. It is important that you always have to caution investors. It's very important. All right, so we'll go back to our sheets where yesterday we spoke about any questions on the presentation that I made. Any questions? Any questions?
Okay, hello, Kobe.
Hi.
Yes.
Shut up. Yeah.
My questions are that is there a case where the share price will be overbought so that to the extent that it will reach a point where it naturally or then maybe like is there a case where share prices are overbought or even oversold? And then two, these companies like this is how often do they pay their dividends? Like most of the performing companies, how often do they pay their dividends? Do they pay them annually or 2 years, 2 years? I just want to know how often they pay, because investors are in for returns. Thank you.
Okay, so I'll answer the second question first. So that don't go off, just unmute so that we have a discussion. All right, so with dividend payments, it is pursuant to profitability of the business. So if you are a shareholder, it means you understand the business, you understand how business is going. So therefore, if the company makes money or the profitability is good and dividends are announced, you understand the background. However, if business is not good, you know and you understand. So therefore, you would understand that, well, this time business is not good, so let's not pay dividends. All right. So to answer your question, dividends are predetermined based on the profitability of the business. Okay, ECB used to be the regulars when it comes to paying dividends. However, when COVID came in, when the financial sector restructuring also hit the country, a lot of the companies like GCB did not continue paying based on the obvious. But now they have resumed. They have announced that they want to pay 1 cedi per share, and they have also made mention that this has to be approved by the Bank of Ghana. So even though shareholders or the board of directors have approved that dividends can be paid, it has to be approved by the Bank of Ghana, because the Bank of Ghana too, they have the responsibility of ensuring that big institutions or these companies are always liquid to serve the public purpose. So they are also in there checking these things. So dividend payment hasn't been very regular since I can say since 2023 or so. So this is the first time in a long while that it is going to be paid. So if it is paid, it will be a further boost for shareholders. It can even help realize these price projections that have been made in this document quicker and more easily. Is the second question answered?
Yes, it's evident.
Okay. The first question I didn't understand though.
Oh,
Okay.
and is there any evidence that sometimes share price may be overbought? So sometimes if you recommend a buy, and people continue to buy, they reach a point where it will be overbought. And so when share price are overbought, what is the, if it truly is overbought, do they show that shares are overbought, and what is the implication? And if maybe recommendation to sell shares and stocks are oversold,
Yeah.
what is
Good
the
morning.
implication? Because we know that in the
Okay, I think I get
international, yes.
Amos, please mute your mic. Amos. Okay, so Shadrach, I get you now. So maybe the word overbought is what I don't understand, but what it is that
Normally, in international stocks, when you are maybe trading, right, using maybe the analyst, and it indicates that particular stocks is overbought, even if you are doing a forex on and a particular currency or currency is overbought, it gives this message that it is possible that the price will also fall. And when the stock price is oversold, it also gives them indication that for some period of time the price is going to rise or something like that. That is
okay.
I know.
So is it what you refer to? Can you see the screen? I just typed in we're buying in stocks trading. Is that what you're referring to?
Overtrading project, excessive minus, yes, something like that. So if you maybe overbought or oversold, maybe it can give you a clear.
Okay,
I
so
think what he's trying to say is maybe the company has an estimated number of shares that they want to sell, right? And then looks like a lot of people come to buy it, more than they expected.
okay, all right. Let me attempt. I think I understand where you're coming from. So companies have a number of shares which is fixed, issued onto the market for trading. So I'll use GCB as an example. So GCB has shares outstanding of 265 million that is available for trading. All right. So if you want to buy shares in GCB, it is some of these shares, the 265 million shares that have to be made available to the market so that you can buy. All right. So in case I want to buy shares, I will place my order. Sometimes you can get it on an app. Okay. If the shares are not available on the market, what it is that you won't get to buy. But if there is a lot of shares on the market, you can buy. So for you to say there's been a situation of overbuying, it is the ability of the buyer. All right, the broker brokers too have their own pool. So brokers, they manage portfolios. They have funds that they manage. So they can decide to buy a lot of shares in, let's say, GCB. So far as the shares are available and they keep buying to the target that they have set for themselves, it is in line with what they are supposed to do. there can be a situation of overbuying where it exceeds the expectation of the fund or the investor. So if when you keep on buying, the impact on the market is that there is demand, and the response will be that yes, once there's demand, whoever has the shares would have to analyze very swiftly and say, no, a lot of people want to buy these my shares, so let me increase my share price. You understand? So when these dynamics, hello.
Yeah, I'm listening.
So when these dynamics they interplay, it affects the share price, whether going up or coming down. So there can be a situation, as you are saying, is it buying or selling? So once there's more shares on the market, there's an overload of stocks on the market, there is the tendency that the person selling doesn't need the shares. There's an overflow, there is abundance. So let's try and get it cheap. So the prices drop. So there can't be an overbuying when there is no buyer, there's no seller, if I should put it that way. And there cannot be overselling when there's no the opposite direction. Because the two have to go in hand. Other than that, it will display a market where there is excess supply displayed on the market. However, there are no buyers. So the buying has to go with the availability of the stocks. And once the stocks are bought continuously, it impacts the share price going up and down. We cannot read more on it. I don't know whether I've tried to answer your question for you.
I also think something about the overbought.
Come again.
Hello, I'm saying I also have I'm thinking different about the overbought. So I have something similar about it.
Go ahead and speak.
Yeah, so from technical analysis point of view, I think probably overbought is the stock is overvalued. And then if it's overbought, making it overvalued, meaning the stock should be dropping. And then probably also the opposite, which is maybe undervalued. That's from the technical point of view. But I don't think that's it. So actually overvalued.
Okay. I get from that point. So that means you have excessively bought the stock, which is not supposed to be that price. So it's
really above thing value.
Okay, it's really above market price. Okay. Shadrach, is that what you're looking for?
Yes. So when it's like the perceived fair value is exceeded, something like that. So
okay,
that was I was asking that in the case of the Ghanaian market, is there a situation like that? Because every day the company has a perceived fair price. So is there a case that sometimes the fair price may be may pass the perceived ones or something like that? The price may pass the perceived price.
There are a lot of situations like that. There's a lot. When you go through the analysis, you come out and you come and tell us what you have realized. There are a lot of stocks. I don't want to mention any names yet. So probably you guys select your stocks. You will know. Most of the stocks are overvalued. There are plenty of them. There's a lot of activity on the market, and we can see. So you see Access Bank has returned 215% year to date, ETI 158, Republic Bank 59%, Cal Bank 45.7, and so on. But even before these prices, there is evidence that a lot of them have been overbought. So if that's the term, the overbought maybe is a is a term that I didn't get probably. But if it comes to the valuation or stocks that are being bought at the wrong prices, there's a lot on the market. And as much as there are opportunities in the market of equities that are trading at very low prices. Shadrach, I hope it's fine.
Oh yes, it will be.
Right. So as you continue with your trading, you've come up with a lot of those. All right. So we go back to our sheet, our Excel sheet. Okay. So I presume right now all of you know how to calculate the percentage change. Hi, Joe.
Okay, please 1 minute.
Yes.
Yeah, please, someone just spoke about arbitrage. So if you can touch on that, so if the person can hint on the arbitrage before we move on, so that at least we can get to understand it.
Come again.
I'm saying, after the explanation, I just saw a message where someone said that's where arbitrage comes in. So if the person can say something more about the arbitrage before we continue, so that we can get a broader understanding of the topic.
Okay. All right. That's fine. Annette, your hand is up.
Yeah, I was just asking a question about the stock recommendation PDF. So when you are recommending a stock to a buyer or maybe an investor, are you supposed to add the risks to it? As in, let the person know about the risks he or she may incur. Because the last sentence of your slide, you were saying you're talking about the person looking out for the risks. Can you please scroll to the last? No, the last one. You are saying ongoing monitoring of economic and regulatory risks is essential. So are you supposed to let the person know that this and this are the risks he or she may incur if they should invest in that stock?
Yes, it is very, very important that you communicate everything. For financial analysis, financial transparency is key. It is very important. So even though you are talking about the reward, what it is in for the investor, you're talking about all the good things. It is very crucial that you hit on the risks as well. Even though you are seeing ongoing monitoring of economic and regulatory risks as one line, you realize that I've dedicated one full page for the risk assessment.
Okay.
There's one full page. So it is important that you make it known. In the investment world, okay, so if you ask what is investment, all right, investment is about taking risk. The term investment is about taking risk. So far as you are moving your money from its comfort zone, wherever the comfort zone is, in a typical environment, comfort zone is the bank account. Bank account, that's why sometimes you put 1,000 cedis in the account, you go and come back 5 years and it's still 1,000 cedis or 1,020 cedis because the risk is very low. All right. However, when you put your money into treasury bill, all right, you put the treasury bill, there is a return. All right, depending on the risks of the government at the point in time. So if you put your money in treasury bill and they are saying that treasury bill rate is 13%, yes, it depends on the risk level of government. It used to be 40-something% for treasury bill. At the time, government was a risky, it was a risky area to go into. Okay, so now treasury bill rates are low. You're not getting a good return from treasury bill. You go come back 10 years, your money is there safe for you. However, you want to take a lot more risk. You buy shares, you buy bonds, you buy cryptocurrency, you buy forex and all those. Those are very risky areas. Private equity investments, all those are very, very risky areas. So you bank yourself on some few moments, sometimes within a day. Those who trade in forex, those who trade in the international markets, they understand what I'm saying. In a day, you can put in, let's say, $1,000. By the end of the day, or the same day, you are getting $2,000. It depends on the risks of the investment. In the same way, too, you put your money there today and you lose everything. All right. So risks and return, they go. So when you are giving an investment advice, it is presumed that whoever you are talking to understands that there's an element of risk. So therefore, you don't have to hide it. You have to make it known that these are the areas that I think you have to look at, even though we think that the investment is good.
Oh, okay. Thank you.
You're welcome, Annette. Any more questions, please?
Could you please have a question?
Yes, sir.
Yes.
So yesterday, I was trying to get the data for Access Bank, and I realized that they take out impairment loss from before they get to the net operating income. But then in your Excel sheet, I realized that the net operating income comes before the impairment loss, which is appropriate.
Let me open the Excel so that I can relate to what you are saying.
Okay.
See, so Excel. Which one I thought? Is it the GCB?
Yeah, GCB.
Okay, so okay, I think I have it open already. So which sheet are you referring to?
The income statement.
The income statement.
Yeah.
And okay, so net impairment. Okay, so you are saying that Access Bank had it before the operating income.
Yes.
And GCB has it after, like below the operating income.
Yes. So I want to know, like, which method do you think is appropriate for us to use?
Oh, you see, when you're talking about which is appropriate, it's emanating from the institution that we want to analyze. Okay, so GCB, they prefer putting the net impairment below because probably they think that the impairment activities doesn't affect the operations of the business. So it is below it. So they will factor in all the fees and other revenue to come out with the operating income. Okay. So, and Access Bank, as you have said, okay, put it before the operating income. I think that, right, sincerely, for me, I would prefer to put it above the operating income so that it will net off. So if what you are saying is the case, so for GCB, the net operating income will be this.
Okay.
Right? It will be 656. All right. This will be a very aggressive way of determining the operating income. I mean, for an analyst, we have been given the data by the accountant or by the auditor. We have to analyze what we have been given. There are some analysts who go the extra mile, point out mistakes, or go to the institutions and point out that no, this one you didn't key it or you didn't do it this way. Sometimes they admit, I have done that before. So I went to a company, went to argue my case that Charlie, this guy, this thing that you did, this figure was wrong. The formula should have been this, that. Yes, the analyst, yes, you can approach them that way. But for this that you have mentioned, it can be either way. It is a decision. You as an analyst, you can decide to you can do it as Access Bank has said. All right. But you have to explain that even though the bank decided to do it this way, you think that to get the real operating income of the institution, when you take out the impairment loss, you know the real position of the operating income. You make a case for it.
Okay. And so, I also have a second question.
Okay.
So you said we were considering end of quarter financial, the unaudited end of quarter financial statement.
Yes.
So I want to ask, does it run across like all the years, or we can take for the previous years that we have audited end of year financial statement? Can we use that one? Or since we are doing end of year, it has to cut across for all the years that we are considering?
Okay, so if I got you correctly, for now, okay, so for us, we want to analyze the most current report that is available.
Okay.
All right, so now the current data or the current financial report that is available is the half year or the second quarter 2025. So you go to the website that I've directed you, pick the data as at, so pick 2025, pick the data as at second quarter 2025, you input. If you don't have for the previous half year, you go for it and you key it as well. So you key them so that you can compare half year, half year, half year. You
Oh,
don't
okay.
the first quarter, second quarter, and those things. It is an approach that is used, but for the sake of stock pitch and for the sake of everybody, let's have uniformity in the way we are doing this thing. All right. So let's compare half year 2021 to half year 2022 to half year 2023, half year 2024, and so on. So we are comparing half year, half year, half year.
Okay. Thank you.
You're welcome. There was another hand up. Another hand was up.
Yes, sir.
Okay.
Please, I want to ask that. First of all, we have a formula which we use to calculate for the GCB, which is current price minus previous price into brackets over or slash previous price times 100. Please, which formula is that?
Okay, you want the name for the formula?
Yeah.
It's okay. So you can call it percentage change.
Okay.
Wait. Percentage change formula. All right. So you see, that's it.
Okay. Then my second question is, when do we use CCA or DDM to calculate the value of a stock or to value a stock?
Okay, so you want that to skip what we are doing and go to valuation?
No. I don't want you to speak because I saw a formula which was stock value equal to D1 into bracket R minus G, and we are not using it, so I'm a bit.
Well, that's the dividend valuation model, and we use that one when you are valuing a company that is regular with dividend payments. We are not there yet. We'll get there.
Okay.
And we'll get there. We'll get there.
Okay. Thank you.
Be patient with us. A lot of us we are still learning. Okay, Mills.
Okay, sir.
We are still learning. We are still on the crawling stage. We beg you. Any more questions? Any more questions? It looks like today has been a question. Okay, go ahead.
All right. So my question is about who determines the price of the share, because it was my understanding that it was automatically determined by the market. So between buyers and sellers, they kind of agree on a price that the share should be at this moment. But earlier, I think I kind of heard you say that the price was determined by the institution or the company, to say that, okay, because people are buying our shares, we can raise the price to this amount. So I just wanted you to clarify that.
Okay, so when it comes to the stock market, prices are determined by the forces of demand and supply. So it's demand and supply, all investors together. In Ghana, okay, we read a lot of books. International markets and all that. And we try to bring those ideas into this country that is how our market should work. But let me point it out to you and to everybody here that in Ghana, these are the factors that determine share price movement. Number one, when there's dividend announcement. When there's dividend announcement, it moves price on the market. Right? The reason why it moves price on the market is that investors want to benefit, want to get some of the dividends. They want to get some of the dividends that the company has been going to pay. So therefore, there's going to be demand. A lot of investors will rush and try to get some of the stocks. So there will be demand and the share price will go up. Number two is the announcement of financial data. So financial statements, right? So when a financial statement looks good, all right, it drives a lot of investors. Investors become optimistic or bullish about that company. So they want to take position so that they benefit from either dividend or capital appreciation. So these are the two main things. In the other markets, in the international market, sometimes when there's an announcement of a new CEO, the price will go up. Ghana, we don't know that. Whether you can cry over it or you can. That is not the way our market works. In case there's an announcement of a new product in the market, international market, it moves the price. Ours, it doesn't move. So these are the two things that move our market. So let's accept our market as it is. And once we understand it that way, we will benefit from it. So examples are MTN Ghana. MTN Ghana, they announced a new CEO. Nothing happened to the market. MTN Ghana, they released financials, very strong financials. You saw the price of the stock going up. They announced dividend. You saw the price of the stock going up. All right. So and it's in many other companies as well. For the banking stocks, it's even more common. Access Bank, we saw it. They announced dividend, and the share price moved very fast. Right. So for us in Ghana, those are the things that move the prices of the stocks, and it is not somebody sitting somewhere. I, as an investor, when I have shares in, for example, Access Bank, and I see that the financials are good, I can say that, oh, let me go buy more, or let me just hold on to my shares. However, when the financials come out, they are not good, and I foresee that the financials going forward will be worse off, I can quickly make a decision and say, no, let me sell my shares now. So that is when you find out that a lot of investors have poured their shares up to the market to sell. So in that decision, once there's excess supply and less demand, the share price will start going down. So whoever understands the market so well and is able to project that, no, even though the financials look very bad now, I, as a person, I can see that after, this is just a short period, after 1 year, it is going to rebound. So let me buy the shares at a lower price. So that is what determines the market price, the up and down. Okay, so it's not anybody sitting in any corner doing anything. It is the forces of demand and supply, which I've explained how the demand and supply also works. Is it clear?
Yes, sir, it's clear. And I have
Yes,
another question.
Okay.
Yes, so
Please go
my
ahead.
next question is about the trusting the financial statements from the companies. Because most of them, as I can see, I'm not a finance person, so bear with me if it's a little, I don't know. Yeah. So most of the financial statements state that they are unaudited, right? So is there
Yes.
an audited version of the financial statement that may come later, right? And also, if let's say there are mistakes, not even mistakes, but there are different methods of calculating a certain value, and one company uses this version and the other company uses the other version, or even let's say that there are mistakes in the calculations that the company is putting out in the unaudited financial statements. Wouldn't that be considered an edge for an analyst who looks into the details to determine where the disparities are, or where the variations or mistakes are? Because anyone who uses the face value of those financial statements to value the company might end up with an, let's say, an overvalued price or an undervalued price, right? So for the analyst who looks into the details, right, who looks into the details of the ways by which those calculations have been done, wouldn't that be considered an edge, or like what do we call it, an advantage for that analyst? And then what is the value in also going to the company to litigate how they have done their calculation? So you go to the company and tell them, okay, you've done a mistake here, or you didn't calculate this properly. Wouldn't that be an information the analyst would want to sit on to come up with an edge for their investors? I don't know if that's clear.
Okay, it's clear. Okay, so this is a very good question.
Sir, let me answer
So
this
you've
question
mentioned.
for you.
Okay, go ahead. Answer it. Let's see.
Okay. Good morning, colleagues. You see, every financial company or every financial institution, they have internal auditors and we have external auditors. So the company has finished its end of maybe semi-year or maybe end of year, and they have produced a statement. That means that their internal auditors have sealed the trusting, they have cleared it. So at times audit, the external auditor, they come after maybe 1 or 2 years to check it. So it cannot change from what the external auditors will come and change. If something will change, it's something small, at times it does not change at all. So what you should know is that if it is there that it is unaudited, it simply means that it has not been checked by external auditors, but internal auditors has checked it. And even every branch of every financial institution, they have auditors. So they have checked it and then they have noticed it. And at times too, we do notice that even if you pay attention to radio station or TV station, they give you daily price shares of daily share price. So that means that there are auditors that bring financial statements on daily basis. They bring it on daily basis, and we have analysts who analyze share prices on daily basis. If you listen to radio station or you read papers, you see that you see share price, you see opening and you see closing. So it happens every day. But what our teacher wants to teach us is that look, you may not have time to do it every day. So either you do it semi or end of year. So if you see the financial statements titled unaudited, it does not mean that the figures are not correct, or no, the figures are correct, but just that external auditors have not checked it up. That's why. Thank you.
This is a very good answer to it. So, Don Amos, is it a follow-up to the question? Amos?
No, please. No, please.
Then let me just hello. Eben,
Yeah,
is it a
I think that it's a follow-up to the guy's answer.
Okay, go ahead.
Yeah, so I would differ a bit, right? Because if you want to make big investments and all that, you have to wait for the audited financial statement, because management can use their own discretion to do some. Accounting estimates are subjective, right? And they can use their, management decision to make some calculations in terms of calculating for, let's say, depreciation to increase their profit and all that. But the external auditors, because there is a liability on them to make sure that whatever is being reported is accurate, they will take time, and some of the estimates that management have used, they will debunk it and then use the correct one. So you might sometimes even reduce the so-called profit that management has posted. So I think that if you want to invest big, it will be good and ideal to wait for the audited financial statements. Right.
Okay, Eben, thank you.
Okay.
Any
I'm
other?
disputing that too.
So
But what I'm
relax.
saying is,
Relax. Relax. You've made a very good point. He too is making a point. Right? You relax. Let's find out if others have something to say about this same topic. Is there any comment? Okay, so Selassie, just react.
So with regard
Amos, go ahead, please.
Yes, that's not the question I wanted to ask, but with regards to that, I want to say something here. You see, in accounting, we have two types of errors, and then there are some errors. It wouldn't change the total outcome of the maybe the profit or whatsoever. So there are some of the errors that they will commit. The auditors will see it all right, but because it wouldn't change the outcome of the main profit or the net profit of the company, and any decision that will be made based on that wouldn't have any significant effect on the share price or the profit of the organization, they can just ignore it. So that is the reason why sometimes you might use some formula to do some calculations, even though the
the figure wouldn't be that same figure you are expected to get, but the auditors will ignore it for the fact that it wouldn't have any significant effect on the profit. Thank you.
All right, thank you very much. So, Azanda, DK, is it in relation to this?
Yes, but I would like to just add something before you answer or you give your response. So,
Okay.
it is obvious that when a company is assessing themselves or giving their reports and everything, they are kind of incentivized to make themselves look good on paper. Do you get it? So there are various kinds of tricks, not tricks, but there are various kinds of methods to use to calculate it. Now the company will incentivize to use the one that makes them look best. Do you get it? And so if you are the analyst going to assess this company, you are also it is your duty to look into the methods they are using and not just take their values as they present them. And that's what I'm trying to say.
Okay, all right. I think Felix, you wanted to react, Mr. Dovi.
Okay, what I wanted to say is auditors do not audit books just as the end of a semi or an end of a year. That is to say, maybe the year ends on 31st December, then first then you see the first July, then you see external auditors auditing. No, at times it has shown you that some companies they are even auditing their 2021 books as of today. Though if you are an investor and you really want to invest and you want to wait for financial statements as of today to make a decision today going forward, and you don't want to rely on, even though it is being titled unaudited, then probably you will not be able to get the information you want to. That's why we have a lot of data analysis and then people who look into these financial statements like this. And looking at what you are teaching us is very good because you are looking at the interest income and then other performance in the indicators of the institution. So for me, whether it is audited, whether it is unaudited, please, nothing will change. Even if you work in a banking institution before, you see that we don't close. If the books do not balance, you don't leave the office. The books have to balance. Everything must be equal before you leave. So to say you want to wait for an external person to come and that balance your book before you leave the office is some way. But I understand that external auditors are important. Thank you.
You're welcome. All right. Raymond, when you come in, then I come in family.
Okay, thank you very much. Thank you very much. I think I just still want to ask this question, but then in as much as we are talking about investment is always a decision and it has a risk motive. I wouldn't want to say that if we are using audited information, it wouldn't have a problem, or when it has been audited, it wouldn't have a problem. I'm still on the aspect where even if the unedited financial information are used, okay, in the course of it, there is a change. When you audit it, there is a change. That is where I will still be, what should we do as an investor? Because we are just getting into the market and we are trying to know how things, because this is a risk we are taking. We wouldn't rely on the positive aspect and say that, oh, there wouldn't be a change, so let's go with the unedited one. But we are looking at the aspect where if there is a change, what should an investor or analyst do with this? That is where I'll still bend my decision on. Thank you.
Okay, thank you very much for all your submissions. So you can see that on your screen that I have my presentation displayed boldly based on unaudited financial data. I have concluded that investors can buy. So the question is, do I have to wait for the full year to get the audited before we go with that? For us as analysts, for financial analysts, I think that we wouldn't wait. I mean, that's a position. It is risky, but we wouldn't wait. The position is that in our mind, it has gone through processes of auditing. So as Felix mentioned, the internal auditors, which are regulatory standard, which are also a financial sector regulated standard, have gone through the processes already. All right. So we do not expect that there will be major changes. We do not expect that there will be major changes. I made reference, I think, when we began this presentation, that there were situations where big institutions like the World Bank and so on, they made some projections and things happened in the economy, the world economy. So COVID came, nobody knew COVID would come. All right. We thought we were done with COVID, things were going to improve. Then Russia rose with the war with Ukraine. Now we are seeing more wars. So do we say that because risks are bound to happen, we have to sit and wait? No. Once we have the figures that we are sure that at least internally some work has been done, which the internal auditors too are regulated by their management, and the management too, they are overseen by their board of directors. We know corporate structure is solid, is good. We will go by what we have seen. All right. And the figures that we have been churning out, I made you see what we did with not Access Bank. The others too, I showed how the returns have been so far. And they are all based on what? Unaudited financial information. We've seen SIC risen by over 300% this year, 333%. Do you know why it is rising? For us as financial analysts, if you ask me personally, the first answer I'll give is that it is based on expectation, and that is not in the financials. Expectations from investors. So what are the expectations? SIC has been struggling for some time now. We have seen that businesses that were supposed to go to SIC were given to competitive or competitor insurance companies. So now we are seeing that it is expected that businesses will now go to SIC. Okay, so investors, even though they have seen that financials have been very bad, even though they haven't seen the new reports and seen that, Eben, please, apolitical, we are not discussing politics here. Even though we haven't seen any figures yet, we are very expectant that the price or the company will start doing well. All right, we are expecting that business will start getting business, and we are seeing it even in our streets. So, for example, the Ghana ports is a Ghana port. So when you import cars, all right, the insurance that you are supposed to pay on the DV, they all go to SIC now. Okay, the operations, they are starting to get some money from business. So it is based on the investor expectation, not based on what we have seen in the financials. So waiting to get the financials being audited is good. It is the proper way of doing it. However, for analysts and investors, the more you wait, the more you lose money. That's all I can say about it for now. It's 8:45. I'll take final few questions, then we'll close the meet on Saturday. So Saturday, we'll do a recap of all that we have learned. Today has been a question and answer session, which I think has been very good. I'll take some few more questions so that we meet on Saturday.
Coffee, please, I have a question.
Please go ahead.
Yes, I wanted to know the investment recommendation side. Is it possible for you to recommend buy, sell, or hold at the same time, or you have to pick one?
Yes, sir. We have to settle on one. You have to settle on one. But you see, there are some advanced, let's say, analysts who would go beyond, let's say, if, for example, I'm saying buy here. Okay, so if I say buy, it's buy for, I can say buy for new investors or buy. If you're a new investor, you hold. If you are already a shareholder, you buy. So both sides, you have to come up with reasons. So if I'm a new investor and Kofi is saying buy now, why is Kofi saying buy now for the new investor? And at the same time saying hold for the existing shareholders. So you see the scenarios, new investor, already existing shareholder, sell and hold. I mean, those things, they happen, but we don't want to confuse anybody here. Let's stick to one approach. Okay.
Okay. Thank you.
You're welcome.
Kofi, I want to say something.
Please go ahead, Ifa.
Okay, to the guy who said he had no finance background and he was asking about share prices. So initially, before the company will go to the stock market, there's a primary market where the stock is the secondary market. So they have to go on the primary market, which is they would have to like get an investment bankers who will like assess the market and see how much people will be willing to pay for their shares. How much people will be willing. So the investment bankers will prepare an IPO for the public to see, and then they will come up with an estimated value of the shares that the public will be willing to pay. So that is when initially the share price is gathered. It could be that they have overvalued the share price, or they have undervalued the share price. But either way, initially that's where the share price comes, and then after that, the shares will be traded on the secondary markets between like other investors and stuff. So that is when the information and other stuff can make the price either go high or like come down. Yeah, basically.
Wow, thank you, Deputy Class Rep. Thank you, that's very insightful. All right, I hope we are all learning. Okay, so any more questions?
Sir.
Yes, please go ahead.
Yeah, please, I want you to make something clear to me. You see, for the past 3 days, our focus has been more of financial institution in respect of equity. I would like to know this format, how will it affect non-financial institutions and maybe mining, services, companies? Because based on this Excel, you see, you have interest income. If I want to evaluate let's say a mining company, how would this change? And also in respect of impairment and other ones, how will it change? And what should I look for? What elements should I look for in analyzing or focusing on my trends and then my percentage growth and stuff? Thank you.
All right, there's also a very intelligent question. So the approaches, they change per the company and the industry you are looking at. So for banks, if you can't remember, okay, let me just look at, mention or point out this in our presentation. So as you can see, I adopted 3 approaches here, for example. So I used FCFE, the PEPS approach, and I used the residual income. And if you paid attention, I made mention that the residual income, okay, is more commonly used, or the most appropriate model used for banks. Okay, so for this FCFE, it is for institutions that have solid cash flow records. So for banks, sometimes they have issue with capital, working capital, which distorts the flow of cash flow. So making this approach not very efficient. So the residual income, which relies mainly on the earnings of the business, the bank's earnings, which is not really cash, all right, we can rely on their earnings, historical earnings. Okay, when you factor in the cost of equity, you are able to get like a meaningful share price or the interesting value. So as you can see, me, if you ask me, I just use the 3 valuation models. I just use 3. However, I would say that the 10.57 is the proper intrinsic value when it comes to valuing the stock of GCB. It is not the 23, but in valuation practices, you apply the various approaches and you can average. So in averaging the 3, we came up with 14 point blah blah. All right. And then when it comes to the looking into the details of the analysis, let's say the trend analysis and all that, the manufacturing companies, their components are different. They are components. So you don't see interest income, you see revenue. You don't see interest expense, you see administrative expense. All right. So these are some of the things, the differences that you see. So that once the components are what you are going to analyze. So for the banks, I'm using the banks because they are more easier to relate. They are not very complex. And I think that the bank's approach will be very basic for everybody to catch. So once we understand the bank's approach, then we can move to the others. When we move to the others, it will be easy. We can just adopt as we move on. So there's a very good question. Every company, every industry, and the approach that we use in valuing them. Okay, so we will get there. For the banks, let's all behave like the bank is the basic way or the easiest approach. Let's go by it. Let's have the standard way. All right. Once we go through it, the rest will be much more easier. You understand? So if you pick a company that pays dividends very regularly, you can decide not to use any of these approaches. The target price approach is also a very basic way to estimate the share price, maybe in 12 months, in 1 year, in 2 years, and so on. For dividend paying companies, you apply the dividend discount model, and that will estimate the share price. For financial analysts, we are very concerned about the cash flow. That is why we are concerned about, because we believe that cash flow is what drives business. Cash flow is where you get your dividends from. Cash flow is where you can get your capital appreciation from. Okay. So basically that is what that's the approach we are going to use. So we'll get there. It's gradual. Okay. Any more questions?
Kofi, I want to ask something.
Okay.
So you were saying that the Ghana financial markets react to like certain information, but not all information, like the release of statement of income. But does it mean that our market is not that efficient comparing to other countries? Because for a market to be efficient, it means like information is available has to reflect in prices, right? So does it mean that our market is not that efficient but compared to other? Because in other words, change of CEO can cause price to go up or go down because they might have like hope in the CEO or not.
Okay.
So,
Okay, I get your question. So it depends on the books that we have been directed to read. So the books that we are reading or the courses that we are reading, the books were written by people in the international markets. So if I'm asked to also write a book, I have my perspective and I'll say our market is very efficient based on the factors that I have mentioned. So if you are measuring our market with what their measure is, then you can say our market is not efficient. But by our own standard or way of doing our own things, I can say our market is also very efficient. So for your books sake or for school's sake, you can say our market is not efficient because it's not moved by things like change of CEO, announcement of new products, collapse, or the burning of one station.
or even the CEO is getting married to.
Yeah. So those things. When this country, Goil had one of its stations bent down. It didn't affect the price, and the price was doing well. Shareholders were happy. All right. So ours is different. Me, if I write a book, I'll say our market is very efficient. If I,
All right.
Thank you. All right, Jeffrey.
So my question is related to the one prior to this one.
So you are saying that different types of companies have different, or different industries have different valuation models. But then I'm also asking that, can you focus more on the ratios, right? Because at least the ratios happen to almost every company. So can you focus on the ratios like EPS, PE ratio, and those things, and then decide or use that as a standard? Like, let's say if the company has a higher EPS, it means it's profitable, no matter the industry. Or yeah, you have to memorize all the industries and then the various approaches you have to take.
Okay, so we'll go through everything. I'm expected to go through everything with you guys. So I'm not going to limit ourselves. Some people just rely on the trend. They just use trend analysis to make their conclusions. They are not wrong. It's fine. All right. But I did not want to end at one point. We're going to tackle ratio analysis. We're going to tackle, now we are doing trend. So the ratio we're going to apply some trend analysis to it before we go to the valuation proper. All right. So I'm not going to focus on one side. I'm going to ensure that we learn a bit of every one of the aspects. Because as you can see, with this work that I've done, if I wanted to do a very easy, very fast work, I would have just ended on the trend, which is very easy. And people still use that approach in the industry. Okay, so what we have learned, the trend analysis is also top notch, but we are moving ahead of that. Okay. Yeah.
So please, I have a question.
Okay. Please ask the question.
Please, sometimes when you want to buy a stock on maybe any company, it is advised that you check on the Ghana Stock Exchange Market Watch if there is enough liquidity. But then sometimes you check and you see that there is liquidity, and then you place a buy and it will be there for like 1 month and expire and it won't be processed. So I don't know what goes wrong.
The GSC Market Watch.
Yes.
That's the app.
Maybe you want to buy shares in maybe MTN and then you check on the market watch and you see that there is liquidity, but then you place a trade with your broker, maybe IC Wealth, and then maybe over a month, and then still it is not being processed.
The market watch is live, right? Is it live?
Yes.
Okay, I'm looking at it. Let me share this tablet. Okay, so on the market watch now. Probably you have to look at your price.
Okay.
You have to look at your price. So it's possible that there is excess demand or there is a lot of shares for CPC, but your share price doesn't match.
Okay. I mean the ask and the bid price.
So you need to check that. If it doesn't match, it won't trade.
Okay. Thank you very much.
You're welcome.
Yes, sir.
Yes, sir.
Now, please, on what on what the previous guy just asked. So there is this trade that I took that's on CLDY. The price at that moment was at 0.10, but you just showing the watch is saying that the price is at 0.11. So I would like to ask, one of the trade has been cancelled, and I don't know if it's because the price has already moved from the 0.10 to 1.01. So I want to ask, when you take a trade, does it take the immediate price, or it goes over to take the current price, which shows?
When you place a trade, okay, and like the other gentleman asked, and you don't watch the price that is available to be transacted, it can remain there until it expires.
Okay, so is it advisable to cancel if you see a price change?
Yeah,
because there are charges. There are charges when you take a trade.
Yeah, you can cancel it.
Oh, okay.
Cancel it like immediately.
Oh, okay. Thank you.
You're welcome. All right, it's 9 o'clock, please. I have to work for my company. I'll see you guys on Saturday. Let's have more discussion. All right, thank you all for joining. See you Saturday. So Saturday we'll communicate. I'm sure it will be 7 p.m. I'm just praying that there won't be any soccer around that time because I want to watch football. So if there's no soccer around 7 p.m., then we'll meet. Okay. All right, but definitely we are meeting on Saturday. Tomorrow I'm taking the day off. All right. All right. Have a good day. Have a good weekend.
You too. Bye.
Bye bye.
You too, bye. Hello, sir. Hello, sir.
Hello. Can you
Hello.
me? Hello.
Please, can we have your slides? Hello, sir. Please, can we have the slides?
Which one?
The one you used.
Oh, today I didn't. Today I didn't.
For today's session.
I didn't do any proper presentation. I just showed you guys what I've done in GCB for my client. So that one, when it's ready to be sent out, I'll let you know, and I'll send it to you.
Okay.
All right.
Thank you very much.
All right. Bye. So if you need me, you can send me a message on WhatsApp 0244 208 667. Bye.